This is the continuation of video number 1 on RSI 1-year breakout strategy. We went through the stock selection process. There are 4 steps that you have to identify which stock you have to pick from the chart list. Now we are going to actually make our buying decision. There are 2 ways you can actually buy. One is buying the breakout, second is buying the pullback. For the breakout, I would say buying any daily close above the highest weekly close. This is the breakout buying strategy. What I basically sorry, what I basically mean here is, let me just quickly go over with this example here. Put RSI back in. Okay. We had our first breakout right around this area, held its gain, and any close above that high is a buy. Let's go to daily. So we know exactly where is the buying point. Buying on this candle, let's say you bought around 550 and you had a nice rally all the way up to $15. So it's like 300% in a couple of months, in actually a month. That's a beautiful gain. What I would have done in this case is I would have started drawing trend lines as soon as I found anything that popped up significant enough. That's one trend line, and another trend line here. That's why I hate trading views, because it just gives you too many noises. There's another trend line right there. Come on. It's another trend line right there, so any break below is a sell. Any break above the trend line, you just hold the position. So you can also use the staging analysis that I have discussed. Or you can use Elliott wave on this breakout place. Now buying pullback, you could have been sitting and watching all these gains, but then buying pullback, I typically use RSI 3 and weekly chart. So we know our breakout happened right there. I don't have to show you guys again with 14 RSI. Breakout happened right there. Buying a pullback, I would have started watching. Since the RSI pulled below 10, I would start watching. And typically the next move is critical. After 10, if the next move actually crosses 30, and it'll most likely retest the oversold territory on RSI 3. Most likely. So when it retests and when it breaks out above this, it's a buy. There you go. It's a buy. That's how you play the RSI pullback. So pullbacks, you have to use RSI 3 on weekly. Well, basically where I got this strategy from is, if you go to Chart School on Stock Chart, this is free. You can go ahead and look at trading strategies here, and you can look at Larry Connor strategy. He has given trading examples on how to use RSI 2 strategy, but I don't like the RSI 2 strategy, and I've read entire book. That's all he goes through, with a bunch of examples on this text, on this book here. But then RSI 2 strategy is not going to give you a better buying position, in my opinion. The reason is because he concentrates on really optionable stocks, and his strategy is actually going to work better if you're playing options, because That's what he's interested in. And this strategy is a very good option buying strategy because you're looking for something like Google or Apple. Those are highly liquid stock and highly optionable stocks. I mean, those are trading with a huge amount of options every day. So I modified the strategy for my case with RSI 3. You can go ahead and use RSI 4 to 5. I mean, 3 to 5, I don't mind. Anything you can use. Just that you are not going to see it below 10, which is what I like to see for a buying option. And provided that the RSI is breaking out. That is one important criteria that you need to know. You need to concentrate on. And your stop loss when you're buying pullback is going to be right below this. And when you're playing the breakouts, your stop loss, you can move on the weekly basis with the lows. You can keep moving your stop losses right there and right there. And now when you use the stage analysis, you clearly know that this is your exit point. You're not getting a second exit out from that. If you use stage analysis, you know that that's an exit point and you don't get another chance to exit. Well, in this case, there was an exit chance out there. So if you use stage analysis, it's very critical on playing breakouts. So now we have seen the buying decisions, where to make the buying decisions. I've actually shown you how to do the stop loss on this. I'll go over this. You can have your stop loss just below the weekly lows. Weekly lows after your breakout. Or you can have your stop loss at prior resistances on daily. Let me show you what I mean by prior resistance on daily. In this case, when you enter a trade, your stop loss initially is going to be this candle right here. And you wait for that particular breakout candle. In this case, the breakout, when did it happen? Okay. In this case, the breakout was here, so you wait for this candle high to break out and close on weekly above that to actually have your stop loss. And then you keep moving it based on the weekly lows. And when it breaks down, you have an exit opportunity if you use stage analysis, and if your trend lines are proper, you should be getting an exit out. Fairly a good exit. Okay, now we have to adjust this. If you're using daily chart to do your analysis, you have to adjust this. Well, all you got was that as your exit. Stage analysis doesn't have to work always, but this case, I don't know if I drew my trend line right. This looks like more like a solid trend line, but honestly I would have not known if I was playing. This is where I would have drawn my trend line. First break was right here, retest, I would have got out right there. If I was swing trading the stock. What was I supposed to show you? Prior resistance on daily, yeah. You can actually, this was a huge resistance level as you can see from this area. A lot of times it has got tested down there, and you can keep moving your stop loss on weekly. The next trend line, the next resistance was right there. Once it broke out, you could have got out right here. And the next time when you play this, you're going to be playing based on that breakout because that's a weekly breakout. You can play that. Or the other way to really use the stop loss is using SMA. This is a simple way to really do it. This explains it. Okay, you can use 20 SMA as your stop loss territory. I've seen a lot of people use it, but if you ask me, I would not recommend using any indicators to make buying decisions. I would actually use the prices action to trade for anything. Well, in this case, the 20 SMA actually confirmed our trend line. So you can use that as a trend indicator in this case. But it's up to you how you want to really put your stop loss. The first one, whatever I have told you here, is the best way to really put your stop loss on using this strategy, playing any kind of breakouts. Then how to set targets. You can use two indicators to set target. One, you can use RSI 14, either a daily or a weekly chart. You can use anything you want, depending on how comfortable you are with the time period. Oops. Okay, you got one trend right here. So any break of this trend on RSI is a selling point for you. And then now you got a second trend. So there you go. There is another exit. Now you got your third trend. That's another exit. Now you can go ahead and keep drawing all this, and you have your fourth exit. And now when it crosses below 50, you don't want to really be in the trade. That's what I mean by any breakouts or any price points below 50 on RSI is just way too bearish. But when you have to use it with multiple time frame. When the stock is actually bullish in weekly and you see a daily pullback on RSI, which will most likely coincide with the RSI 3 pullback. So, which also can constitute to your buying decision. So, do not buy just because the RSI is below 6. Don't buy it because it could go lower and the RSI could be straight. If the RSI is moving straight under 50, which means the stock is actually going lower. If the RSI is going straight above 50, is the stock is going higher. Now, I wanted to actually show you some examples. CSIQ. This one, the RSI 14 breakout happened, I believe, right around December. That was your breakout. That was your breakout time period, and this is almost a year. Maybe that's around December, and you had a nice run for uh, well, if you use the same strategy, you can see that there was a buying opportunity. Let me just show you the candle. There was a buying opportunity right here. Anything above $3 is a buy, and you draw the trend line. Any break below the trend line is a selling point, and now if you watch the stock for a retracement, there should be an RSI 3 pullback for any pullback buyers. In this case, the pullback happened right here and pushed above 30 immediately, so which is showing strength, showing a good amount of strength actually. And you watch for this candle in this example to break and close above that. That was this candle. You could have got around $4, and you could have swing traded it all the way up to this candle by advancing a stop loss to this candle, honestly, which is 800% gain in 1, 2, 3, 4, 5, 6 weeks. And then you watch for the next weekly closing high. Simple, you just have to do this over and over again, and you'll eventually have a great idea of how to play this. And then move it again